Okay, everybody, and welcome to exercise 17-4. So this is assuming the same information in 17.3, which we just went through, except that the securities are classified as available for sale. The fair value of the bonds as of each year end is as follows. So just so you have kind of an idea in terms of what we're going through and doing, is that when I go through over here and I say let's go to sec.gov. So when I'm holding investments, let's go to Apple. And we're going to go to their quarterly report. And I want to show you something when I look over here in terms of Apple's income is what you're going to see down here. And I probably talked a little bit about this when we were first starting the class. But if you look over here, is that the change in Apple has a lot of money in investments. They have marketable securities here of 59 billion, marketable securities here of about $100 billion. And so when you hold investments like that, you're going to have unrealized gains and losses, meaning that we need to record our securities at market value. But at the same time, it's really going to be along the lines of their unrealized holding gains. And that's what's really important to remember, is that these aren't real gains. And this is why we're including them in what we call comprehensive income. If we actually sell the securities, we're going to put it up here in other income expense. But if we're just holding the securities and we don't sell them, we have to show the true value on our financial statements. However, if you think about it, if I'm writing up or writing down my marketable securities, what's going to be my credit to? Or like, what's my debit to if I have a loss, or what's my credit to? And that's going to basically be the unrealized holding gain or loss. So for this exercise here, the first thing we're being asked to do is to record the journal entry at the date of the bond purchase. And so this has not changed. So this is still going to be 322,744. That part has not changed. In terms of going through and recording interest revenue and the recognition of fair value, okay, for 2020, right over here, this also, the interest, the journal entry to record the interest revenue is also not going to be changing. We're still going to be going through, we're receiving cash of 36 grand. The investment in bonds is going to be amortized. And then my interest revenue is going to be over here at 32,274. Now, once I go through and have this here, my ending carrying value is going to be at 319. What it's telling me here is that my fair value of the bonds for 2020 is 320,500. So what I need to go through and do is I'm going to need to make an adjustment over here of the difference. So my adjustment here is going to be 320 less the 319.19. So on my balance sheet, I want to be recording this at 320. So to get there, what I'm going to have to go through and do is I'm going to have my investment in bonds of 1,481. And then over here, I'm going to be crediting unrealized holding gain or loss. in this part here, this is considered to be a gain. So okay, so this is for 2020. Now it's asking me to prepare the journal entry, record the recognition of fair value for 2021. So my fair value for 2021 is 309,000. Okay. Okay. However, we're kind of we're going to have to do some, want to kind of go through and do some, have some fun here. Let's do some T accounts, because this is going to be the best way for us to go through and to understand this. So in my bonds, my ending fair value is 320,500. Okay, this is ending as of 2020. This is after I made the adjustment of 1,481. Well, I went through and I amortized it this year of basically 44,098. So I amortized it when I did the interest calculation. So my bonds value after this was going to be 316,402. Now notice this. This ending carrying value is different, right? And it's because this is just the normal bond amortization. Okay. So let's take a step back here. And I flip these around. Okay, so my investment, let's go through and redo this. Okay. So at the end of 2020, my investment was 320,500. That was my ending investment in 2020. Let's take a look here though. How did we even get there? So my ending investment to get there, what I had was so I started out at 322,744. This is as of 1/1/20. I then amortize this by 37.26. So this here came from right here. So at the end of pre-adjustment, I had 319,098 or whatever you have here. But what I said to myself is wait a second. This bond here, so this is my amortization. So over here, my account pre-fair value adjustment is going to be 319.18. But what I said though is that the fair value of the security is 320,500. And this is what it needs to be. So here, what I had to do is I had to debit my investment in bonds by 1,482, and this is getting me to my fair value at 12/31/20. So that was a lot of fun. Let's do the next year. So I come over here to my next year. So at 1/1/21, my ending balance is right over here of 320,500. I then amortize my premium in this year by 4,098. So my amortization of my premium is 4,098. So my ending carrying value is 316,402. Now my fair value amount is right over here. is at 309. So in this case here, I'm going to need to make an adjustment. And I hope to God I get this one right. My adjustment for this one is going to be the difference between these two, or 7,402, and that's actually correct. So let's go over here. So this is, so they're only asking us for the fair value adjustment here. So what I would do is I'd have unrealized, holding loss, holding gain or loss, equity. This would be 7,402. And then I would have investment in bonds. Okay, to record fair value adjustment. Wow, this is messed up. This is going to be a great question to ask all of you. Okay, so that's as of 2021. Now let's do 2022. That sounds like fun. Okay, so we're now going over here to my investment. So at 1/1/22, my ending becomes my beginning. So over here during 2022, I went through and I amortized my bond by 4,508. So my ending carrying value is 304,492. But here it tells me that my ending value in 2022 was 308,000. So in this case, I'm going to kind of revert back to what I had done. So this is 2021. So what I'm going to do here is, because I need in 2022, here I'm going to need an adjustment for 3,508. Wow, this is a great question. I'm really liking this one. This is just an exercise too. That's cool. So that's what we go through and do. I'm sorry for my initial slip up, but I think the real best way to figure this out is by looking at it in terms of T accounts, because I can just tell you that if you don't go through and do it this way, it's going to really mess you up. So there you go. And in any event, thank you for joining me here on this journey through chapter 17. Where we go, I have no idea, but it's going to be a fun journey, because look at all this other stuff. I haven't killed anything yet. I'll see you all soon. Have a good one.